Good morning and welcome. Petro Radio News Hour. Joe and Jason on a hump day. Yeah, happy Wednesday out there. Jay Powell testifying in front of Congress for one more day today. We've got gold moving as, again, hinting that rate cuts are coming. The economy's no longer overheated is the big comment from today from Jay Powell. If he says anything else, we'll bring it to you. But we've been telling you all week, get ready for Thursday. And, well, gold keeps moving up, right? I mean, we had a nice little profit taken on Monday. It was up a little bit yesterday, up more again today. Get ready. All-time record highs. We've got the bubblicious equity markets and gold and silver playing along. Our toll-free number, 800-951-0592. The website at allamericangold.com. And Jason, we've got all kinds of things in the year of chaos to talk about today. Yesterday, during the Half Empty Cup show, Saudi Arabia now fired about. So now remember, Saudi Arabia, now a part of BRICS. All of a sudden, yesterday, now a couple of things have happened. Number one, they switched payment systems. So up until about a month ago, and maybe even 2 or 3 weeks ago, Saudi Arabia was only really set up to take dollars for oil. That was how you had to pay. That was their payment system. They have now moved to the Bank of International Settlements payment system, which will allow them. They don't have to, they don't have to now. Just like, listen, a month ago, they didn't have to take dollars if they had another way of taking something. They just didn't. So in actuality, they did have to take dollars because it was the only way people could pay. But now they've decided, hey, you know what? China wants to pay in renminbis. Great. Russia, of course, Russia has its own oil, but you get my drift. They can now take other payments. You'll remember we've been talking about the big problem here. We were handed a gift, and this gift we took advantage of. The gift was, hey, we got to use dollars for everything after World War II. Right? That was kind of, hey, that was how they transferred power to the United States, right? The bankers used World War II to essentially make America the power. And everybody was using our financial system and would buy dollars. We could go into debt, blah, 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 blah. But then we decided we wanted to weaponize it, didn't we? We're going to punish people that may not want to do what we want them to do. In other words, hey, well, this is what we think is our best interest. You think it's something else. We're going to punish you with the dollar. Of course, we got Russia and Ukraine going on right now. Remember, Janet Yellen's been pushing. So there's a lot of assets frozen in European banks. Russia didn't have a lot of assets here because they'd already were done with us a while ago. But they had a lot of assets, about $300 billion worth, in European banks. Of course, Janet Yellen, she wants to take those assets and give it to Ukraine. I mean, we have a word for that. It's called theft, because that's what it would be. I mean, we won't want to say that. Janet Yellen won't want to, we're weaponizing our system. Saudi Arabia yesterday said, hey, guess what, guys? If you decide that you're going to seize these Russian assets, we're going to dump your bonds. We're not going to hold them. We're going to unload them. And Jason, it's just, again, a way of, hey, we want a bigger piece of the pie here. You're not going to bully us. You're not going to weaponize it, because if you do, you know what? We feel like now we can stand on our own 2 feet without the United States. And, of course, Europe's in big trouble. France is in huge trouble right now when it comes to debts. And if Saudi Arabia decided to unload all of that European debt, Jason, this thing could be an avalanche.
Yeah, Saudi Arabia's, main motivation for spending dollars now is, has been, getting protection from any, local adversaries, like Iran. And I think it's quickly being shown that they need, less and less need such a thing. Remember last year, Iran and Saudi Arabia had a meeting. Remember, Joe? Remember they had that meeting? Nobody seems to want to talk about it.
Well, they're both part of BRICS. They're both part of BRICS.
Seems to me that Saudi Arabia doesn't need protection from Iran anymore. So that might be more important about getting away from the dollar than anything else, is that they don't need the U.S. and their weapons to protect them from, let's just say, Iran or wherever. So, all those things are matching up for less dollar usage, Joe. Less dollar usage. Dollar's not going away, but
nope.
Where do you take a fat stack of dollars if Saudi Arabia doesn't want them? Well, take them to the United States and throw it on the pile here, and more inflation, right, Joe? Lowering rates and printing money is coming, right? Lowering rates and printing money is coming. And if Saudi Arabia and China and everyone and Japan start throwing their dollars here, and then the Fed prints, lowers rates, inflation, Joe. I'm scared. I'm not scared, but it's very worrisome how bad the inflation could possibly get in the next few years, Joe. It could be massive.
It's going to be a crazy next 6 months. That is for sure. We'll be back after the break. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Wednesday. Quick look in at the markets. The Dow's up 40 points. The S&P, another record high. I love it. And get ready, right? This is exactly the patterns that we saw at the end of the last bubbles, right? Going back to the dot-com bubble, the financial crisis bubble, and now this bubble here, right? We've got these record highs driven by just a few stocks and really starting to look like the economy is significantly slow. Jay Powell today, yes, the U.S. economy no longer overheating, slowing down, but we'll still get some records here for a little bit. The NASDAQ, it's up 65 points, and again, very few players. The 10-year note below 4.3, 4.298. Crude oil higher. By the way, we had crude inventories today. Let's just say not good, right? More drawdowns, more crude drawdowns at Cushing, Oklahoma. Got crude up almost $1 here, back towards $83. Power still out all over Houston. I mean, I think the port is open again. The oil port is open, but man, I feel sorry for those guys. Gold's up. It's only up another $14 here as gold is sitting here, flirting with all-time highs, 23.80. We'll see where it closes, but very close to that 2,400 level. And, of course, we've got the inflation and jobs data number tomorrow. Silver back above $31, and the Japanese yen. Yeah, this is an all-out I don't know what's going to happen here, but the Japanese yen now 162. I mean, we're going back over 40-plus years to all-time lows. And it's not going to hold. I'll tell you this right now. That thing, I don't care how much intervention they do, they're not going to be able to hold all of this together. But, again, what are we getting ready for? We're getting ready for tomorrow. Not really. Next week, next month. No, we're getting ready. Are we getting ready for the election? Because it doesn't matter. If you wait till the election, you've waited too long. I'll just say that. This thing is coming unglued a lot faster than most people realize, especially with these banks. the regional banks. Now, the big banks have already been doing it, but the regional banks are dumping every good investment they have to make up for the disaster that's in their commercial real estate, and they're running out of stuff to sell. So I'm just telling you, be warned. And I told you that Jay Powell is going to cut in September, not because they want to, they're going to have to. Get diversified here and do it quickly. If you've got $50,000 or more, check out our friends over at YREI. Why? Because you get great fixed rates of return, up to 10.25%. You've heard me say it over and over and over again. Not correlated to Wall Street. What if the S&P hits, I don't know, 50 record highs? So what? So what? What if it crashes 30%? So what? What if bank A, B, C, D, E, F, G went under? So what? You can use it as income? Yeah. Want to supplement your retirement income? That's a great way to do it. You can compound it. You can do whatever the heck you want with it. There's no fees. They don't play games. You can actually feel good about an investment. No offense, but do we really want to buy NVIDIA stock knowing that it's going to be used for data warehousing and digital currencies and spying on everyone? Not really. Check them out. InvestYREFI.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI24. So, Jason, we're talking about the news out of Saudi Arabia yesterday that they are now saying they have warned, I guess, the G7, saying that, hey, if you guys decide that you want to steal Russia's assets, we're going to sell all of your bonds. And at a time now where France is blowing up right now, right? We went from the pigs to the effing pigs. Now we've got the Japanese yen, right, in free fall again. And remember, this whole debt market, we talk about U.S. Treasuries here, whether it's Eurobond treasuries, Japanese treasury, one shock away from none of these markets operating the way they're supposed to operate. And again, remember, I go back to the financial crisis. I don't know if people remember. It was like August when Ben Bernanke was talking about we're going to raise rates a quarter point and everything's great and blah, blah, blah and yada, yada. And Jason, by October, the party was over. And I kind of feel like we're setting ourselves up for one of these things again.
Yeah, and so when you see the rates being changed, a lot of times when they start to lower the rates, a lot of times the market's crashing happens after they started lowering the rates, right, Joe? It's like, oh, it's coming. We think we need to take some action. And before it actually blows up, I think in 2008, they started lowering the rates before the 2008 crash really got going. And so these rate reductions that are coming are almost an indication of, hey, the thing's going to blow up really bad now. This is your last chance. It's almost an indication. It's weird because you would think that would help prevent some of it, right, Joe? And it seems a lot when these market stresses start to happen that the lowering of the interest rate at the beginning of the cycle seems to indicate it's coming now. Now it's going to hit. And sure enough, right? I mean, I don't remember the rate reductions and. Man, with the rate reductions for COVID that happened after COVID, or were they starting to lower those rates before COVID, and then suddenly COVID blew in? I have to try to remember that, but it's
remember,
very, very interesting.
They had that taper tantrum late in 2019, which all of a sudden the Fed had to open up all these emergency programs, right? And that was the end, right? The rate hiking cycle came to an end, and it was going the other way. So, all of these things, we're setting it up again. The problem is the size of the problem is significantly worse than it was. You go back to the, like 2008. What was the debt? 7-8 trillion? Something like that. It wasn't even 10 trillion yet, I don't think. Maybe 10 at the most. Right? We're now at 40. right? We remember, Portugal may have a problem. Ireland may have a problem. Greece had a problem, right? Remember the pigs? But now you're talking about France and Italy, the second and third largest economies in Europe, having problems. And then today, word out of Germany, Jason, they may have a problem with their debt market. So this thing, believe me, don't be fooled here. This is kind of all the signals of the top. Get yourself prepared. That's I'm just telling you right now, this is easy. This is an easy call. And a lot of you out there should be happy about it because easy calls are great, right? Because, hey, I could do something about it. I could do something about it right now, and then I can just sit back and relax because this is an event now where I think so many people are going to be caught off guard. The news out of Saudi Arabia yesterday, that was very, very significant. And now there's a lot of talk about what's going on with BRICS. How much power do they really have? Are they going to get a seat at the table? The Japanese yen looks like it's over with. I would expect most countries to abandon the yen completely, meaning Japan will be the only one using it. I think we're going to see troubles with the euro now, right? Because when your top three economies, Germany, France, Italy, all say they've got debt problems, Jason, none of that bodes well.
No, and we, like I said, we talk about these, the histories. You see the other times with you have these traumatic market crashes. And these are the same things we've heard before. And I'm checking those rates, Joe. Yeah, in February 2020, the Fed rates had come all the way down to 1.5, where it had topped out at 2.5, right? 2008, May 2007, it was at around 5.25, kind of where it is now. But before the 2008 crash really started getting going, it was 2.5. They already lowered it, so they lower. And then after the lowering is when the crash comes. So we're heading for it. It seems obvious to me now, Joe, because we play on is it going to go higher? Are they going to go sideways? Are they going to drop rates? Well, here we are now in July of 2024, and I think, Joe, both of us are, and pretty much everybody else around is saying, okay, they're going to reduce rates. Now it's just a matter of when. Is it going to be here late July? Is it going to be in September? What's it going to be? But it's... you keep saying that you think for sure they'll get 2 of them done this year. That's sure seems to be the pattern. And if this is what they're going to do going into 2025, the market crash is coming. It's baked in, I guess, Joe. They're going to give up on inflation. What's going to happen when these markets are crashing? They're lowering rates and inflation's still hot. That'll be something new, right? What'll 1970s? Here it comes, right?
Yeah, this is. Like I said, this is an easy prediction here because when we start to look at by the time and remember, there's been a lot of people screaming fire in the movie theater about the Fed should have already lowered rates. A lot of people questioning the economic data, specifically jobs. There's just a scathing thing out about restaurants yesterday, where all of these companies that are in the restaurant space that are Wall Streeters lowering guidance on all of them. For Starbucks, McDonald's, Wendy's, Burger King, Papa John's, Pizza, you name it, Yum Brands, right? They're saying, hey, traffic has come to a screeching halt, and now you've got these issues where the data still looks okay, right? Because look at the jobs report the day we were up. 206,000 is not a bad number. Of course, most people that are in Wall Street don't believe that it was 206,000. They don't believe that number at all, and it's causing very big problems. And the problems that I see is, if you go out to allamericangold.com today, you'll see it. Right? The Dodd-Frank legislation, all of these funds that they were supposed to have, they don't have the money. They don't have it. They can't bail out these banks. It's not possible. Right? I mean, look at Silicon Valley Bank. That bank had $175 billion total. That was it. And they literally, what did Janet Yellen have to do? Oh, we're going to back up everything. Everyone's going to be made whole. You're not going to get, because their hedge funds buddies had all their money in there. That's not going to work the next time around. It's not going to work because we're talking about, forget about $175 billion. We're talking $2, $3, $4 trillion per bank, and this is something where, Jason, I don't know what the plan is, right? And we'll find it out. I'm sure they've got a card that I haven't thought of yet. We know we're going to go to the digital currency, but I've educated everybody here about the rules. You know the rules. I've told you the rules. You want to withdraw? Penalty. That's their first line of defense. And I don't care. Pick it. Your bank account, your money market account, your E-Trade account, your 401 account, your IRA. Their first line of defense is we're going to hit you with a penalty. You sure you want to do it? If too many of you say, the heck with it, I'll take the penalty, their next line of defense is just telling you flat out no. That's what's coming. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Wednesday. Gold kind of sitting right here near all-time record highs. Right now 23.81. Tomorrow, I think the inflation number is going to come in nicely for them. It'll be, whether it's the same or a tenth lower. Gosh, heaven forbid it's 2/10 lower. And then I expect jobless claims to continue to be high. And couldn't we finish this week? Things fall the right way. There's probably a good chance we're going to see we'll be at or near all-time record high gold prices. I think silver also, we're going to see silver, probably $32 I could easily see, maybe even $33. We'll see how it all plays out. But I've got a great special today. I've got, let's see how many. I want to make sure I got it right. 112. And actually, you know what? I don't. I just lied to you. I've got 100 of these. You're going to get 2 $5 Liberties. Okay, so that's the 1866 to 1907 private gold, right? I'm going to heat it up at $670. So if you got 2 of them, that'd be $1,340. Pretty good. A $10 Liberty right now is $1,320. So it's only $20 more. But when you buy 2, you're going to get a pre-1921 Morgan dollar. And you're also going to get 2, and if you're on our YouTube or Rumble channel, 2 Buffalo copper rounds. So you're going to get, listen, that pre-21 Morgan dollar, that's at least $35. Right, so essentially, you're going to get 2 ounces of copper, a pre-21 Morgan dollar, 2 $5 Liberties for $1,340. I mean, a $10 gold piece, $1,320. So Jason, you're actually getting $5 Liberties really for less than you could get a $10, 2 5s for less than a 10. And I'm going to say this right now. Yes, 10s get less than 20s. It happens. It happened a lot, almost for like a year and a half. That's gone now. That's all gone, right? But now to get 5s for less than a 10, and I think being fractional is going to be very, very important in the future because we're going to see much higher gold prices. And I think with a digital currency, barterable material is going to be the key here. So $1,340, 2 $5 Liberties, quarter ounce, $5 pre-1933, and of course Liberty, so pre-1907. A pre-21 Morgan dollar, and 2 copper rounds at 800-951-0592. And, just to give you an idea of the, people don't realize how big a problem 2019 was. The Fed had to open up a repo facility. They gave Deutsche Bank $1.4 trillion. Trillion. They gave Citigroup 1.43. They gave Barclays 1.46. Goldman 1.67. JP Morgan got 2.6. Nomura, right? Japan 3.7 trillion. And Jason, this just gives you the scope of the problem. This time it will be absolutely overwhelming. And here's the difference. Let me tell you the big difference. See, the financial crisis, a lot of you were, okay, Joe's just trying to be scary, right? It's not going to be that bad, and you got caught off guard. Look at what happened with Silicon Valley. The fastest run on a bank in U.S. history. People, Jason, this time around are like, hey, fool me once, shame on you. Fool me twice, shame on me. And remember, this time around the rules are different, right? You guys are on the hook. And I will tell you right now, people will pull that money out of those banks faster than you can blink an eye because, let's face it, Silicon Bank was a bank nobody ever heard of. Nobody heard of Silicon Valley Bank before it was getting ready to go under. These other banks, Jason, people know their names, and they will run for the exits. And, again, they will put those rules in place, right? They'll put the penalty rule in place. Then they'll say you can't do it. But now it gets worse, right? Depending on where your assets are. Money market account. Your money market account breaks the buck. They have the right to just dilute your money. Well, I put $100,000 in there. Well, it's now 90. Why? Well, it broke the buck. Another month goes off. It got worse, right? Now it's 80. It's 70. Those are the rules, Jason. I didn't make them up. Those are the rules.
Yeah, and the size of these bank failures when they're happening, I mean, it seems like Silicon Valley Bank isn't getting the reputation that it deserves. I mean, the size of the failure is much bigger than, at least dollar for dollar, bigger than Lehman Brothers, right, Joe?
Yeah, it was the largest bank failure in U.S. history.
Everyone hears Lehman Brothers. Lehman Brothers. It was the big one for the 08 housing crash. But if you look at dollar, I mean, obviously we have inflated dollars, so you have to maybe adjust this, for the inflation. But other than that, Joe, it was a big deal. They really covered up something in 2023, and they put a cap on it. And sure has the feeling of the 2019. Some things were failing, put a cap on it, and in 2020, here comes COVID, and we're printing like crazy. And Joe, I wonder what the amount of printing and the amount of money given out in 2020, the list of who got the money when that comes out in 10 years or whatever, right? Right. Because what they gave away for the 08 housing crash was enormous once you found out what they really did. I mean, just what they were telling us. What was the quantitative easing in the 08 housing crash was $40 billion a month, something like that as an average. Well, during COVID, it was $120 billion a month. With what's getting ready to go down, Joe, and the size of everything, what's going to be the monthly quantitative easing this time, Joe? $250 billion, $300 billion a month.
Do not wait here. 2 $5 Liberties, a free 21 Morgan, and 2 copper rounds. $1,340. The price is insane. It really is. 800-951-0592. Jason and I will be right back after the break. 800-951-0592. Run. Don't walk to the phone to get this deal. We're probably not going to make it through the day here. We only had 100 of them. Now we don't have that anymore. Listen, we've got 2 $5 Liberties. I got a couple of phone lines open right now. 2 $5 Liberties, a pre-21 Morgan, 2 copper rounds. So the Morgan, the copper rounds, that's at least $40, at least, right? So you're talking about $1,300 for 2 $5 Liberties. This is crazy. Getting fractional gold this close to the spot price here at 800-951-0592. Commercial bankruptcy filings up 70% so far in 2024. Listen, a lot of investors, I don't know how many of you are in REITs. You guys are getting slaughtered. You can't get your money out. You know what's so funny? That's the best example. Can't get your money out of them. You just got to take the losses. Well, I want a redemption. Well, we're only redeeming this much this month. Sorry. Try next month. 987. And Chapter 11 means you're done, right? Here's the keys back. We're out. Not to be outdone. Business filings for the first 6 months of the year up 55. Chapter 11's surged 68%. 68%. Small businesses up 55%. Chapter 13 filings that allow individuals to just pay a little bit of their debt off. 23% increase. We told you about commercial real estate. 70% increase. So, Jason, underneath the surface here, there's a lot of write-offs that need to happen here with all of these bankruptcies.
Those bankruptcies are going to just keep climbing, aren't they, Joe? I mean, this is the cycle that we're in, and bankruptcies across the board, right, Joe? They're just going to increase and increase and increase. I mean, yesterday we talked about late payments for different assets, right? You know, now a credit card, 90 days delinquent in credit cards is up 40%, which means that means people not paying credit cards for 3 business months, 3 payments. To me, Joe, the person that hasn't paid a credit card in 3 months, that's the guy giving up, and that's up 40% just in the last month. So I think bankruptcies, Joe, are going to be coming fast and furious the rest of this year, and yeah, you look at the historic numbers of like bank closures and all these economic things that you have talked about for years, and that I've done just for a little over 6 years. These things, once they get going, it just sticks around. These numbers stay bad for a long time. You know, bank closures, Joe, in 2008, we think, 2008, it's so horrible, and Lehman Brothers and all that. Only 25 banks, so you can say that, only 25 banks closed that year. It was the next year when 140 banks closed. The next year, 157 banks closed, and it went on for years. I mean, in 2017, years after the 2008 crash, we still had 8 bank closures that year. We look how much of an emergency just 3 of them were last year, right, Joe? 3. So, yeah, I think bankruptcies are a good indication of the direction where we're headed, Joe, and it's going to become we're going to see the percentage of bankruptcies going up and up and up. I mean, the 2008 crash happened because only 8% of the mortgage-backed securities failed. Once you get to 8%, the whole thing fell apart. And it was at 4% before anybody knew what was going on. So, yeah, it's coming, Joe.
Yeah, it's something when we keep trying to stress to you, if you don't hold it, you don't own it. You don't own it. I can't stress it enough to you. I'm telling you what the rules are. Listen, I don't care. It's over. I'm gonna go to ask the bank teller. They don't know the rules. Telling you what they are. This is what is going to happen. You're going to want to get your money, and they're going to tell you flat out no. That's what they're going to tell you. Why? Because that's how it's set up. Oh, the whole system is going to come crashing down, and we can't bail them out, so we got to do what we call a bail-in. What's a bail-in? You pay for it. One of the ways they're going to force you to pay for it, you got to keep your money in there. Right? Think about how would you like it if they told you, well, I know, hey, Schmuckatelli, Mr. Schmuckatelli, Mr. Schmuckatelli, we really like you guys. Yeah, I know you got $200,000 in your bank account, and of course you bought a bank CD, and then we put a couple $100,000 in the money market account, but there's a lot of chaos in the markets. There's turbulence in the markets right now. We just can't give it to you right now. Sorry about that. And then the next thing you know, does that bank go under? And then they tell you, well, hey, I know you had that $200,000 in here, but you really weren't using it anyway. You'll have access to X amount. They'll pick them out. I don't know what it'll be. $10,000. That seems to be their favorite number. Hey, you can have access to now, we're not taking the other 190, friend. We're not taking it. We're just going to hold on to it for a little bit. Here's an IOU. We'll give you an IOU. You can't do anything with it. But sometime later, I don't know when, maybe you can sell it and get your money back. Money market account, hey, it's just worth less. You just lose. Yeah. Time to call the 800 number, 800-951-0592. If you don't hold it, you don't own it. 2 $5 liberties, a free 21 Morgan, and 2 copper rounds for $1,340. Final segment coming up. 800-10592. We still got at least half of the special still left today. And I'll tell you right now, I think it's the best one we've had because fractional gold is going to be very, very important in the future. I mean, who knows? Even copper rounds, how high is copper going to be? I don't know. But you're going to get 2 $5 liberties, a pre-1921 Morgan dollar. What's that going to be worth? Right. I mean, silver's got such a long way to go, right?
It used to just be $1, Joe. That coin used to be $1, right?
Right. $1,340. So you're going to get 5 pieces. You're going to get 2 $5 gold liberties, a silver pre-1921 Morgan dollar, 2 they're the Buffalo copper rounds, all for just $1,340. I mean, you start looking at the like a $10 liberty, which would be half ounce of gold. That's $1,320. A $10 Indian's like $1,350. I mean, Jason, this is a great opportunity here today at 800-951-0592. Keep adding to your portfolios here. And again, I'm waiting. All eyes are going to be on tomorrow. What is the inflation data going to look like? And I think we've all got a pretty good idea. They've got it pretty well rigged up, don't they, Jason? It's going to be a number that I think they're going to be like, oh, see, we're making progress in setting up for that December rate cut.
We'll see where that number is, right, Joe? Obviously, I don't really believe the numbers half the time anyway. So if they want rate cuts, it could be 4.5%, this CPI year over year, and they'll just give us a 2.9 number just so things can go business as usual, wherever they need to go, right, Joe? I think the numbers end up going wherever they want it to go generally, because that's how it works, right? You know, them and the people in the big club, they have to enrich themselves. They have to be in an advantaged position so that things can go well. And Joe, that's what we do here. Is we're not one of those guys, but we try to put anybody that's listening into a more advantaged position. Gold and silver puts you in an advantaged position, especially if you don't know where to put your money. If you don't have a specific investment, or you have somewhere you're going to put buy into a business, run a business, get this stock or something specifically is a good investment. If you're going to save your money, you put it here. That way you don't go a couple of years with the money sitting there and then you just lose value hand over fist, especially with the inflation we've had and what I think might be the inflation to come, Joe.
Yeah, 800-951-0592. I think that's probably one of the biggest questions. Well, I've got some gold, I've got some silver. What else do I do? And I'm going to say this right now, and I don't say it probably enough, but, because I always tell you got to be diversified here. I'm telling you right now, add to your portfolios. It's going to be the safest place you're going to be able to end up being when this thing finishes playing out. 800-951-0592. Jason and I, we're going to be right back with the Half Empty Cup.